Hey guys, Michael Silva here. I'm going to be walking you through some technical analysis in the S&P 500. I want to find out whether we are in a bull trap, if we're not in a bull trap. Today's date is April 24th. This is Friday, so the markets will reopen on Monday. Now we're going to be covering a few things. I'm going to be looking at support and resistance levels. I'm going to be looking at some of the patterns formed and a couple other indicators like the moving averages and the MACD, and I'm going to try to come up with an idea of where I believe that the market will be going, where I think eventually it'll go, and when I personally will start either building a position to start trading, either long or short, depending on what takes place. So let's go ahead and get into it. The first thing I like to do is look for support and resistance. So if I scroll back in the history of this chart, you see a couple dips back here in June of 2019. This little wick right there and this wick right there and those ones back there. I'm going to go ahead and draw a horizontal line. I'm going to call that a really clear area of support, especially looking at how it interacts here on the chart. The reason why I call this support is you had not only all those candles in the previous history, so there's a lot of data points, right? There's a lot of data points by this support. We have just recently, a couple days ago, 1, 2 candles, 3, 4, 5, 6, and it's pretty much where the candles not ended forming, but where the wicks are at the very end. So like it acted as support. Now, obviously, when it was down here, it was resistance, right? It struggled to get above. See this big candle right here? It's kind of a inverted hammer or inverted doji. I don't know what you want to call this, but it's a pretty bearish looking candle, a reversal candle. Came all the way up, got rejected and pushed all the way down, and then finally it broke up, and now it's acting as support. So that's what happens when resistance is broken. Resistance then becomes support, and typically when it breaks, it moves up and then back tests, and that's exactly what it took place right here. Now if you scroll back more into history, you see these candles. This was acting actually as support at this range. Support moved all the way up, right? Then all the way back down, back tested, and then boom. It's clearly a big area of support, because when it was broken, it really made a big move. Okay, and then yeah, just like I said in the previous history of the chart, it had the same stuff going on. So what's taking place right now? Well, right now it's kind of coiling up right around this support level. So holy moly, like typically if it's going sideways for a while, it's called coiling up, and either it's going to break down, and it's going to break down hard like we've seen previously over here, or we might see it even potentially break up. That's why we need to look for resistance levels. So let me go ahead and kind of draw out a resistance that I clearly see here. I mean, it's right, in my opinion, it's right there, but I'm going to scroll back in history of the chart to see if it matches up. So the reason why I call it here is I have this candle right here that got kind of rejected and then moved back down, okay? That's the first area. But then when I go back over here, this candle acted as support, okay? It came down, bounced from here, but then retested, and then it did pull back. So I'm going to call that right there the resistance. And if I look back over here, check it out. These candles came down, bounced from it. It was acting as support at that time. And yeah, kind of right around this range. We had a couple more candles over here. So yeah, that is definitely, and even over here, a very clear area of resistance. So this market right now has been coiling in within this channel, which basically says, hey, when we get a break either way, it's going to be moving, and it could be moving pretty significantly. So let's go ahead and look at the pattern that is forming. This right here is an ascending wedge. There's a couple ways you can look at this. Okay, both are bearish in my opinion because of this big bear pull kind of pulling back down. So this is an ascending wedge. It was kind of had a big base and started going upwards and kind of getting tighter and tighter, and then it burst down this day right here and even back tested the resistance, right? The support. It back tested the support, but when support's broken, it becomes resistance. There's also, you can look at it kind of like this. It's a bear flag, right? It's trading within a channel. And if this is what they say, a V-shaped recovery, you just might see it, continue through this channel like this. You might boom, 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 especially if it breaks this resistance, boom, boom, and then you have your V-shaped recovery, right? You'll have some pullbacks along the way, but hey, that's pretty bullish. Either way you look at it, let's just say right now it is a ascending wedge, okay? Because I kind of like the looks of that. Now let's go ahead and take a look at a few indicators that I have up. I have the moving averages, the 50-day and the 200. Let's go start with the 50-day moving average. This blue line is the 50-day moving average. 50-day moving average acts as support, and it also acts as resistance. Okay, this is just a moving average. So right now it looks like the price action is struggling to get above the 50-day moving average, which leads me to believe that if we do break above it, we might see a full-on break to the upside, or it gets rejected and continues to move downwards. But the ultimate godfather moving average, in my opinion, is the 200-day period moving average, and that is at a very interesting level. That's right around the 3,000 marker. So it's going to take a lot of buyers to get in to break that level, especially when it's already below the 200-day period moving average. When the 200-day period moving average starts curling downwards, that's when you notice it's becoming more and more bearish. This crossover right here that took place is already, they call that, I think, a death cross. That is already pretty bearish. Now, when you look at the 200-day period moving average, it is kind of flat, right? We're on the daily time frame. It's not really showing anything much, but if it starts curling downwards and this starts spreading away from it and getting really downwards, that's when the price action starts really pulling backwards. Now, why do I think that this is bearish? Well, even looking back to 2008, I mean, I could swipe the chart all the way over there, but I'm not going to. You can do your own check on it. But in 2008, you saw the same thing, a big, huge pullback during the recession, and you see these monster bear market rallies take place, also known as bear traps. Basically, what it does is it brings in a lot of false hope into the stock market and gets people amped up, feeling good, feeling comfortable. But then when things take a turn for the worse, they take a turn for the worse, and it takes it a very fast, sharp decline. Now, we're living in a time where the Federal Reserve is printing more money and more stimulus than ever in the entire world. This is the first time it has ever happened, and it is very uncertain of what the results of that is going to be. I think it's going to end up driving this market up. That's what I originally thought, and it was down at this point, and it got driven up. But do you really, like, when I personally think about it, when you think of the individual companies that need all that bailout and all the stimulus, do you really want to invest in companies that need the Federal Reserve to constantly bail them out? The answer is no. They're just becoming too big to fail because they have so many jobs that they offer, and et cetera. But the thing is, financially, they're broken. They get over leveraged on debt. They pay too big of bonuses. They do share buybacks, and they're basically just doing everything that they can to pump up their share price for the shareholders. Because what that does, it brings in more money and more investors. To me personally, especially with what's going on right now, everything just seems very skewed. I don't understand why the market would be pumping up like this. Companies are going to be reporting their worst earnings probably ever, and they're struggling to make their debt payments. So the only clear reason why I think the market is going up is because of what the Federal Reserve is doing. Okay, that's enough fundamentals. Let's get back into the technical aspect of it. The next indicator is the MACD. The MACD right now is floating around the 0 range, and you see some of this volume dropping off. This is a very bearish sign when this blue line of the MACD, if it were to cross over and start moving downwards, okay, like that. If it were to start doing that, cross over below 0, I mean, I just think that this market's going to be pulled below the 272 range, and we can see that sharper decline from that point. This coil right here leads me to believe if it breaks this, we're going to see the move up. It's going to have a struggle, though, getting over this 200-day period moving average. But if it breaks here, I mean, you can just see the free fall. There's really not too much support in this range. I mean, a little bit down here. So you might see a little bit bounce and a retest at that point, but ultimately I think it would be going lower. So how am I planning on trading this? Well, I really don't feel comfortable entering into a short position at this particular time. I would feel a lot more comfortable entering into a short position at this $3,000 level because of the fact I think it would be a greater risk versus reward trade. I can have a tighter stop loss because if it is broken and starts moving even more up, I can just get stopped out and take a small loss. However, if I get in right now and start building a position on a short and then I get stopped out up there, I can lose a lot of money, especially if you're trading options or if you're taking leverage in order to make this trade happen. Now, this is also pretty promising for the bulls. So you can be bearish or bullish in this context. Now, keep in mind, who has more ideals in their favor? I would say the bears technically have more ideals because of this. You have the death cross right here where the 50 cross under the 200. It is an ascending wedge or a bear flag. You have the MACD. It's a lagging indicator. It's a momentum indicator, but it is crossing over negatively. At least it looks like it's going to be, right? So you have those very specific and then also very specific indicators or ideals kind of in your favor, and then you have it struggling to get over the 50-day moving average, and it still has to get over this big area of resistance. So that's how many ideals are in the bears' favor. In the bulls' favor, it's really just like, hey, you have this upwards momentum in this channel that it's kind of moving in, and then you have the Federal Reserve, which you don't want to bet against the Fed all too often because the Fed has some crazy power, right? The most powerful man in the world is Jerome Powell. So you have that kind of going in your favor for the bulls, a little bit less. If you look at the previous day, or technically today's Friday trading period, it did have a lot of steam to the upside, and how it closes on Friday typically determines what's going to happen on Monday. So if you see this run up on Friday, you might see that run up continue on Monday. Now there's a thing on Tuesdays called turnaround Tuesdays. So if Monday's a blow off, you might have a turnaround on a Tuesday. Or if you see a Monday pull back, you might see turnaround Tuesday go up. Now that's just all hearsay, but it's a popular saying on Wall Street, turnaround Tuesday, so you never know. This coil up right here, I'm telling you, if it burst above this, we can see that big move. I would start highly considering a short position at that 3,000 marker, and if it breaks below it, that could be all I need in order to start shorting into it as well. If you're a bull, you can start buying at this level. This 272 would be a great entry, and a good risk versus reward trade, because you can buy in down here, and if it doesn't break, you can see a nice big move to the upside, but if it does break, you can just have a stop loss under there. So either way you look at it, whether you're a bear or a bull, just play it because this coil up is what traders love. Whatever happens, like if you wait for the confirmation underneath, short it. If you want to wait till up here, go ahead, but just be prepared for when it does move out of this coil to be moving into that momentum. Okay, always manage your risk as well as you can, because the only thing that we have complete control of in this market is what we risk. So if you want to risk tens of thousands of dollars, by all means, but you got to be okay with losing tens of thousands of dollars. We've seen what happened with oil. You don't know what can actually happen here in the stock market. We're just using our knowledge, our technical skills in order to determine what we think will happen. Okay, guys, have a good day. I hope this video helped out. I will see you on Monday with some more live trading sessions. If you guys have any questions, concerns, emotional outbreaks, leave them in the comments section below. Also, check me out on Instagram, Figuring Out Money. I haven't been pumping out too much content there, but I do plan on doing 50-second to a minute quick analysis on stocks. So if you have any stocks that you want me to analyze, go ahead and DM me on Instagram, Figuring Out Money, or leave it in the comments section, and I'll do my best to get to those. So I'm going to go ahead and close it off. See you guys. Bye.